All right, I can't do countdowns like this. They're too long, they take too long, and I got triangles on my face for the virtual summit coming up. It's just a month away, plus 5 days, but welcome to the REI Rocks review. We're all here. We got Angel, we got Jason, we got our lovely audience. Jason, let's start with you because you were here first. How you doing today?
I'm doing pretty well. I just got out of an Algebra 2 class and ran over here to hop on here. So,
Exactly. Well, it's definitely simpler than algebra. It's you and I both are fans of algebra, of course, so it's not as bad as it would be for some people. But Angel, how you doing today? You need to unmute there first.
I'm doing all right as well. Jason and I are teaching at the same time, so he's got algebra 2 and I'm working with pre-algebra. So
Well, I guess that's a good segue. We can't spend too much time on it because we got to get to Keeley's presentation. But that's one of my favorite things about working with you guys. It's the Academy Presents. It's so much about teaching, and it kind of bugs me a little bit about how so many people they get into real estate and their real play is they don't ever want to get that good at it. They don't want to do a ton of deals. They just want to be able to sit back and teach, even though it's I don't know, like that one really bugs me, and I know it's starting off kind of on the wrong foot, but Angel, you're just so passionate about this, and that's why you're giving away free access. I got to throw these triangles back up here for that virtual summit. So, and that's how we get all this content. So maybe that's a good springboard for the audience, Angel, if you want to explain the review in the context of the summit.
I absolutely can. So what we do is we pull one of the presentations out of a previous summit, and the review reviews the presentation, and we go through it at 1.5 speed, so a little bit faster than normal. And what we do is we break it down, we tell you our takeaways, and hopefully in the process, you see how we go through a presentation and pick out the actionable steps so that it's easier for you to do on your own in the future.
That's fantastic, and it's so much more than just theory, which I think that the ones who they never really had the initiative to teach. They never really wanted to do that. It's just basically like an afterthought sort of thing. Uh, you use these summits as an opportunity to get whatever will help you level up and help people who like maybe they are where we are right now. Maybe there's 6 months, 8 months, 18 months behind us, but I think it's really great stuff, and we're reviewing Keeley Hubbard's presentation. But before we start that, Jason, what's going on with you other than like what else do you want to add as far as benefits of the summit? You can also talk about our new VIP section on the new site. That's a very exciting development. What's going on, Jason?
so we have been developing our new portal for the VIP. We've opened up classrooms that you can access the information based on the category. If you want to learn about underwriting, we have a classroom on underwriting. If you want to learn about capital raising, we have a classroom on capital raising. I think we have 10 or so classrooms right now, and we're still diving deeper into breaking them apart even more so that you can focus on certain categories, find speakers more easily. Everything is just a whole lot better than what we have had, and so I recommend everyone hop in and check it out.
Exactly, exactly. And to send off this VIP site, this is the old version right here that's getting phased out. Here it is right here, and we are reviewing this presentation from the Spring 2022 Summit. And I guess with no further ado, let's get started.
Hey guys, it's Angel with the Academy Presents Real Estate Investing Rocks, and today we're going to be talking with Keeley Hubbard, and she's going to be talking to us about like how to build those relationships and turn people into your investors. So strangers even. So like if you're having issues and maybe you feel like you're not getting in the right groove, something's just not meshing up right, we're about to learn some amazing tips on what we can do to make it mesh up faster and get us in the groove and get us moving and catching some traction and getting some inertia going. So Keeley, I'm not gonna take up any more of your time. I'm gonna let you intro yourself and get into your presentation.
I love it. Thank you, Angel. Can I share my screen?
Absolutely.
Awesome. Well, it's so wonderful to be here with all of you. Today, we are talking about how to turn strangers into repeat investors and rating fans. So thank you for that introduction, Angel. Just a brief background on myself. I've got 17 years of sales experience. I'm one of those, freaks that obsesses over sales. Like, I absolutely love it. It's my passion. I believe it's my God-given talent. And so I found a lot of synergies between what I do in my own coaching firm, typically for women business owners, and capital raising. So, capital raising is sales. And a lot of people that come into this world hate sales, right? Most people in general don't like sales. So I've really found a passion in helping people feel like they can be themselves. That's my goal here at the end of this, is that you feel like, okay, I can do this. I can be myself, and teach you some strategies that will help you have better conversations and relate to your investors. I've raised a whole lot in the past, previously for private equity and bond fund that was 30 million. And then also obviously multifamily and Texas Vineyards for our own firm where I'm managing partner with my father of Hubbard Capital Group. So what I want to cover today is I'm going to give you some simple tips that you can take away and implement right away in your conversations. I'm going to teach you the number one rule in sales that's going to guide all of your conversations, some of those major mistakes that you might be making and not even realizing it. And I'll show you how to prevent that from happening. We're also going to touch on website, because that's such an integral part of your capital raising business. And there's a lot of simple mistakes that are being made that are really inhibiting people from moving through your funnel. And so I'm going to give you some quick tips and adjustments that you can make right away to secure those investor appointments. Oh, we've got website mistakes twice on there. So we're going to cover it. We'll only cover it once, even though it's on my list twice. I just noticed that. And I've got a gift for you at the end, because I wish we had time to cover everything, but we've got limited time here. So I'm gonna give you as much as possible in this amount of time, and I will help you follow up with that with some more great educational content afterwards. So this is my favorite slide on everything. I want you to think about, what is your opinion of salespeople? Do these images come to mind? This is what most people think of when they hear the word sales, or when they think of interacting with a salesperson. And we think of, cheesy, slimy, pushy, people that talk a whole lot and don't really listen. They make assumptions. It just gives this kind of off-putting vibe. And so we do everything that we can to avoid salespeople. Now, here's what I want you to realize. When you're capital raising, you're selling. You are a salesperson. And whether you realize it or not, people, when they think that you want something from them, they look at you as a salesperson, even if it's friends and family, people that you're close to. And the problem is, all these bad behaving salespeople have caused consumers, all of us, to put our walls up. And we do everything we can to avoid, the feeling of like we're being sold. So people love to buy things. They love to buy things, but they hate to be sold. When you think about one of your last major purchases, you didn't say, oh, I was sold this watch, or I was sold this handbag, or I was sold this car. You're like, oh, I bought this new car. I bought a new watch, check it out. I bought this new Chanel bag. Whatever it is that you're buying, you never say that it was sold to you. And it's because people hate that feeling. So hopefully I want to give you a sense of relief and tell you what sales is not. So sales is not having to convince or persuade people to invest with you. Whatever you're raising capital for, whether it's multifamily, self-storage, single family, agriculture, you should not be having to convince or persuade somebody to invest with you. There is a better way. You're also not overcoming objections. Everything that I've taught in my sales process and the way that I've sold for over 17 years is preventing objections from happening in the first place by having the conversations that need to be had, disarmingly honest conversations that dig up the potential issues that could prevent somebody from saying yes. When you have a deal that pops up and you need them to wire funds, we have to have those conversations up front, so we never feel like we're overcoming objections down the road. It's also not developing rapport. And hopefully you're excited about this. I've got a kind of a mini.
I'm gonna pause it right there. Like, sales is such a hot button thing, and like here, we're working on this part of our business, absolutely. And one of the other groups that I think, Angel, you do a great job of making sure that they're heard and served is introverts. And that's because you're married to one. He's kind of the stereotypical, like, he's wearing a bow tie for those of you in the cheap seats. Okay. So it's, I think that that process of overcoming your introversion, finding non-sleazy ways to do this has been a big thing. But Angel, like, what's that whole process been like? Because it's really come in the last few months, right?
So it's not helping people overcome being an introvert, but really helping people work with the skills that come from being an introvert, because introverts can focus and be a part of a conversation in a way that many extroverts cannot. When I'm in a group, I hear every conversation around me. I hear everybody talking. I want to be a part of everything. Whereas a lot of your introverts, number one, that kind of activity is super draining for them. And so I think that there's a tendency to go back into what they're comfortable with and really focus on the single conversation. And there's nothing wrong with that, because when you're talking to an introvert, you feel like you are the only person in the room, because that you have the undivided attention that an introvert is able to give. And so I don't necessarily think people need to be trying to overcome anything in their personality that is inherent to them, but working with what is inherent to them to be better at whatever it is they're wanting to do. Because you can use the skills that you already have. You can use what has been given to you and make it amazing. So that's probably really what I'm promoting the most, is use the skills that you've got. Don't feel like you have to be an extrovert to raise capital, because you don't.
I love that, and I think that the thing to learn, especially if you are extroverted, is if you're in the presence of introverts, make sure they're not getting steamrolled. In other words, make sure they have the chance to speak. And if you know their acumen, you know what they're an expert at. Introverts, they're excited by digging into a book and learning new things, all nice and quiet. And so they'll get into so much detail that it'll be practically endless. And that's what we really look for in professionals. But if they won't speak up, you've got to make sure that they get that opportunity and they don't feel difficult to do that. But speaking of being heard, the only reason why we're able to do all of these REI Rocks reviews and these summits is because of our sponsors. And so let's hear about our gold sponsor, Sponsor Cloud.
Hey guys, it's Angel, and we are super excited to announce our newest gold sponsors, Sponsor Cloud. If you're wondering what Sponsor Cloud is the one-stop shop for sponsors to automate, to delegate, to execute every aspect of their syndication projects, from affordable PPM generation to investor relationship management to fund administration and compliance, exclusive capital raising networking events. Plus, for the REI Rocks community, they're going to offer free migration and customer success services when switching from another provider. That's like a $2,000 value. So contact Sponsor Cloud, contact them today, and see how much time and money you can save. You can visit them at sponsorcloud.io/contact, and make sure you let them know that you're part of the REI Rocks community, because these sponsors are the reason why we are able to continue offering affordable and low cost, no cost education, summits, information, knowledge, experiences, all of the things that we're able to find and bring to y'all. It happens because we have sponsors like Sponsor Cloud. So check them out, see how they can help you out. And Sponsor Cloud, thank you.
Good stuff. And so let's find out some more from Keeley Hubbard on sales. Let's go.
Lesson on what real rapport is versus fake rapport. And a lot of times we have conversations with people that feel just like small talk, like they're like a salesperson's trying to find something in common, asking us like, do you have a dog? Oh my gosh, I have a dog too. Isn't that crazy? Right now they're like, oh, we've got something in common here. We've got some ground, to this guy's going to like me, or this woman's going to like me. The biggest misconception that most people have about sales is to be successful or to get people to invest with you, you have to get them to like you. So I would say that there's a lot more to it than just that. And I know that came from Zig Ziglar, and I love Zig Ziglar. I think he's incredible. However, there's a lot more to it, especially when we're in this world of high ticket sales, and investments are high ticket. We're talking 6 figures. So it takes a lot more than somebody just liking us. They have to respect us. So I want you to remember that respect is the path to people investing with you in this world. And it doesn't come from just the kind of small talk, fake rapport building. So I'll explain how we do that. Sales is also not closing, right? We're not closing. You've all seen, I forget the movie, Coffee's for Closers, right? Like you've all seen these sales movies and these bullpens. I think of Wolf of Wall Street. We've got all these sales guys on the phone
Glenn Ross
closing deals. There is nothing that you're ever going to say. There's no such thing that exists as a one-liner that's going to close somebody to investing with you. It doesn't exist. And if people ever buy something because a salesperson is closing them, they're buying in spite of it, not because of it. So if there's no one-liner that closes a deal, it happens as a result of the process and a result of the conversation, a result of building respect and trust with your potential investor. And sales is definitely not desperation. A lot of times, have you ever heard of the phrase commission breath? You're talking to a salesperson, you're like, oh my gosh, they've got commission breath. All they care about is getting the deal, and they'll do whatever it takes, right? Like, what do I have to do today to get you to say yes? Don't ever let those words come out of your mouth, especially in this world. We are in a world of luxury, high ticket, 6-figure investments. And so we have to act differently if we want people to view us differently. So if typical sales behavior causes all these challenges in our potential investors' minds where they're putting their walls up, the only way that we're going to break that is doing the exact opposite. We can't look like, act like, or sound like a typical salesperson. So things that trigger your investors, that make them feel like they're about to be sold, we have to avoid that type of behavior. So let's talk about fake rapport versus building real trust. So a lot of times it's been ingrained in us that being successful in sales means that we've got to leave, plenty of time for chit chat, right? The niceties. Where do you live? What do you do for a living? Tell me about your kids. And we think that if we do that, that we're building real trust and rapport. We try to find something in common. We want to keep the conversation upbeat and keep them happy, right? Like if they ask us a question, we try to think, what's the answer they're hoping to hear? These three things are not going to build real rapport with your investors. The problem is this is the behavior of typical salespeople. And so when we're acting like typical salespeople, we are triggering that response in our potential investor where they start to put their walls up because they're waiting for the close. Oh, geez, when's the pitch? Here comes the pitch, right? Like when are they going to start pushing me into multifamily, self-storage, oil and gas, agriculture, whatever it is that you're raising capital for. So the other issue that I want you to remember is that more than 50% of the population, based on DISC and personality profiles, based on research, more than 50% of the population hates small talk. They hate it. So it's already triggering more than half the population having this kind of, in their mind, irrelevant conversation when they just want to get to the point. What's the point of this conversation? What's the point of this meeting? So instead of these three things, what we want to do is we want to recognize somebody's communication pattern and be a chameleon. And we're going to do more training on DISC profiles and personality types, and you're going to really understand this at a deep level. But high level here, if all you did was recognize that you're talking to an investor that's a little bit more soft-spoken, maybe I can't speak at this volume. I'm going to scare somebody off if they're a little bit more soft-spoken. So I have to change that. I had one of my sales reps. So I left corporate 4 years ago, but I was managing hundreds of salespeople internationally. One of my sales reps was in the Manhattan office, and he had moved from the Carolinas. Now, he moved from the Carolinas to Manhattan, New York. This was a financial education business, so high ticket sales. And he was really struggling. And so I started sitting in on his conversations, and I quickly realized the problem. The problem is that he was not matching the pace at which these New Yorkers are talking. If you can imagine somebody from the Carolinas, he was very slow to respond. And they're like, come on, man, like get it out. And I'm from Texas, so I typically talk a little bit slower sometimes as well. But there was such a gap between his normal Southern drawl and Manhattan, New York. And so he was just losing people so quickly. That can happen in our conversations. I can tend to also talk faster when I'm in a networking situation or even an investor with a conversation with an investor. And I have to realize, like, if I'm speaking a lot faster than my investor is, there's a disconnect. Like they don't feel like they can relate to me. And if they don't feel like they can relate to me, they're probably not going to invest with me. So you literally need to be a chameleon and understand, like, who am I talking to? How fast are they talking? How loud or how quietly are they talking? And start matching that pace with your investors. That alone will help you get more investors to move money into your deals. Body language is also a big one. I don't have that one on here, but when you are talking to an investor, maybe you're on a Zoom call and you're sitting back in your chair like this, right? Like just maybe you're relaxed, but they're leaning into their screen and they're really engaging with you and talking to you. You're going to lose that connection with them because your body language alone, by sitting back relaxed, looks like you're not interested. So I want y'all to think about that. I think matching and mirroring is overused and it's not explained well enough, but I want y'all to be really like key in to those little details in your conversations with investors, slowing down your pace, lowering your volume or increasing your volume. If you're somebody that's more of an introvert, you don't talk as quickly or you don't talk as loud, you've got to tweak that and be a chameleon depending on the investor that you're with. Now, remember the three conversations and which one matters the most. So there's three conversations that are happening anytime that you're speaking with an investor. The first one is the audible conversation that you can hear. It's the words that are being exchanged between you and your investor. So we can hear that, right? The second conversation is the one that's happening in our head. I know I'm not the only one in here that has conversations in my head. So when you're talking to an investor and you've got all these thoughts going through your head, like, oh, I should make sure I mention this. And oh yeah, I need to tell them that. Oh shoot, I forgot to move the laundry over from the washer to the dryer. Did I answer that email? Right? Like all this crazy stuff. And listen, if you're a man and you're listening, this may not be happening to you, but for women, it's like 10,000 thoughts are going on in our head. But we have to quiet that conversation in our own minds so we can really listen to what our investor's saying. So that's the second one. The third conversation is what's happening in your investor's head. And that is the conversation that is the single most important conversation you need to lean into. And what's happening in their head is their concerns, their fears, their questions that they aren't asking you. And they're not always going to bring it up unless you draw it out of them. So we have to be anticipating that. What could be going on in their head? What are some concerns that they may potentially have? People typically don't want to ask that question. Like, why would you want to ask, if they have any concerns? The conversation's going so well. I can't tell you how many lost sales happened on my sales teams because of that alone. Well, the conversation went so well, I don't understand why he just disappeared and never called me back. I'm like, that's why, because there was no conflict resolution, not conflict between the two of you. Conflict in the sense of they have concerns and you're drawing it out of them and you're helping them resolve those concerns. Maybe they have this misconception about 2008 and the real estate crash. And they think that multifamily is also going to crash when the stock market's crash. And they don't understand how multifamily is valued compared to single family. You have to draw that out of them. We have to ask the tough questions and we have to also give the tough answers. Don't think about what does my investor want to hear? They need to hear the truth regardless, and they will trust you more because of it. If they ask you a question like, well, what do you get out of being a general partner? What do you think the answer is that they want to hear? They want to hear you say, well, I make great money doing this. That's the truth, right? I remember I had a guy ask me that when I was selling financial education before I was managing sales teams, when I was direct selling. And he said, well, why do you do this? And I said, they pay me great money. And I love working with people, but it's great money. That's what he wanted to hear. And anything else that sounded fluffy or like I was, trying to skirt the question or dance around it, people are not going to trust you because of it. So you need to answer those questions. And they say, what's the biggest risk in this investment? My answer always is the biggest risk in any syndication is the operator, the skills of the operator and their ability to run a business, to manage a P&L, to manage people. They trust me more because I'm blunt with my answers. So we have to ask the tough questions and we have to give the tough answers and realize that the right investors will be drawn to you. And that's how you're going to build real trust instead of this kind of fake level rapport. Now, we're going to go into the number one sales rule that if you just remember this in all your conversations, you're going to raise more capital. So here's the problem. You might be committing sales malpractice or capital raising malpractice. We'll call it that. Are you presenting the logical solution before finding the emotional reason for somebody to invest with you? What I mean by that is we are so quick to jump into how amazing multifamily is, how amazing oil and gas is, agriculture, whatever it is that you're raising capital for, whatever it is that you invest in. You're super excited about it. And so you jump into it too quickly without angering the conversation of why they should care in the first place. And what really motivates people to say yes and buy anything, what motivates them is one key thing that I'm about to explain to you. And I'm going to tell you a story because I want you to, it'll help you remember it. I love this picture. I've been using this picture in my sales trainings since 2009, so over a decade. And I want you to remember this picture because what it represents is what I refer to as product vomit, features and benefits. And this is probably the most appropriate picture I can find for vomit. I don't recommend Googling that and looking for images, but this represents that, right? Product vomit, features and benefits. This does not motivate people to invest with you because it's the logical solution. And people do not make buying decisions based on logic. Every decision that you make when you purchase something is based.
Hey, Jason, do you use logic to make your decisions?
No, of course not. I use logic to help influence them, though.
Okay. Yeah, it's fair enough. Fair enough. Because it's just like, I don't know, it's hanging out with engineers and programmers and stuff like that. It's like, there's a fair chunk of logic with us. But if you're trying to sell to engineers, then you have to really change how you think about things. It's like that kind of sparkle. We're just going to be like, what's your play, man? So she's definitely right. But as far as like that little subset of engineers and some other people, I definitely say it's like, yeah, no, we still want logic in there. But that's also risk mitigation, right? You're really using the logic to figure out, okay, so how wrong do these numbers have to be before it starts getting a little bit scary? That's the logical part, and that's why it's a bit slower. But
yeah, I think with whatever your risk tolerance is, that's where your like emotions come in, and so you can have like more logical versus emotion. Because if you were 100% logical, you wouldn't invest. Period. It's like there's a chance you're going to lose everything.
Well, yeah, but you're always losing due to inflation, and some years that's a whole lot more than others. And then, of course, with real estate itself, it's like any lump sum, it's going to look really grim in 10 years, just in general, in my experience anyway. But I can't go on and on like that. This wasn't meant to be a segue. If you watch a lot of these reviews, you'll notice that I always try and stretch these segues to get into whatever we have to pitch. But in this case, this was a total natural one to plug Jason's underwriting. He's got a model and he's got a course. There's also a learn at your own pace version that's coming out on the VIP site any day now. But Jason, do you want to talk about your offerings as far as underwriting?
So yeah, I do teach people how to underwrite. We go step-by-step process. I was estimating it's going to be about a 12-week course, but it might actually be closer to a 15-week course. We do have a learn at your own pace, which is coming out really quickly. We have all our content. We just have to get it all finalized and pretty. And from there, it'll be on our new portal. It's not going to be in the VIP. So if you have a VIP membership, it's not going to cover that. You will be able to access it, but it is an additional fee. So just putting that out there.
Right, exactly. So it's all in one portal, though. But sorry, you were about to say?
No, that was basically it. We do have some underwriting classrooms under the VIP section, but it doesn't dive as deep into it as my full underwriting course. So.
Awesome. Excellent. So let's continue. This is the REI Rocks review. We're here every Friday at 11 a.m. Eastern, and we're reviewing Keeley Hubbard's little presentation on sales and, not making it slimy, making it work when what you're selling is a security and it's like six figures to get in. You need to have a little bit more finesse than a lot of people naturally are going to do. But let's continue.
On emotion. Every car that you buy, every item of clothing that you purchase, the jewelry you wear, the watches you wear, because if it was all based on logic, we would probably all buy the cheapest stuff out there, right? People don't invest based on the minimum investment amount or the returns alone. There's other factors that come into play. So the problem is we get really excited about what we do, want to tell the whole world about it, and we end up vomiting features and benefits all over our potential investors. And it's the logical solution. And we never anchored their awareness of why they should care in the first place. So what is a lot more motivating for somebody to buy than features and benefits is a compelling reason to invest. So I'm going to give you an example here. The story I was going to tell you. I have really bad back pain. My guess is at least 50% of you have back pain if you're older than 30 and you're listening to this at some point in your life, right? You've had back pain or neck pain from silly decisions we made when we were young and injured ourselves. But let's pretend you went to the doctor for your back pain. And you go into the doctor and you say, I've got some really bad lower back pain. And the doctor says, neurosurgeon, right? He says, or spinal surgeon. I think those two are the same. Don't judge me if you're in here and you're a physician. I apologize. I have physicians who are clients and they're always correcting me, but you get what I mean. A very skilled physician who's a surgeon that handles back pain and neck pain. And you say, my back hurts. And he says, you know what? I know.
I got to pause there because like something's like when you are talking to salespeople, like sales experts like Keeley, there are so many things that will pop up that, like it could just slip by and you wouldn't even notice. But that moment of vulnerability there, it's so likable, like immediately, like when somebody can turn around and say, okay, don't judge me if I've got the wrong type of physician or surgeon in here, like it's such a great way of cutting the act like everything. You know what I mean? It's like there's like everybody has some holes in their knowledge, and I think everybody will get a whole lot better if you just are fine with saying like me, yeah, biology is definitely my weakness as far as in my knowledge sphere or something like that. What do you think, Angel?
I like
Holy
biology.
Sorry, I'm trying to unmute. I think it's really important to let people know that it's okay to not know everything. Because, I think when you're young, you hate the know-it-all. Well, we're just older versions of our young self. And so I think that we just have a tendency to not want to listen to somebody that is pretending to be a know-it-all, because that's really what they are. They're pretending, because very few people out there truly have photographic memories and truly have just knowledge on everything. So I think that transparency and just the realism of being human is super important.
I love it. I love it. So Jason, you got your PhD in chemistry, so
Chemical engineering.
Chemical engineering. Okay, yeah. So then if you like biology so much, why'd you make that choice?
I like chemical engineering more.
Oh,
But
okay.
One thing, I don't memorize everything, but what I do is memorize where I can find information. And so this goes back to like the Henry Ford saying, I don't know everything, but I have a button I can push and get the answer within like 2 minutes. So I know where I can look stuff up. I don't keep all that mental real estate full of knowledge, but more of sources. So.
Well, I think you're selling yourself short a little bit because, like, if it's something where it's actually like dangerous, or something like that, then like I think that's good stuff to keep in the mental real estate, right? And I think I've picked that up about you as well. So it's more than just remembering where you can find it. It's just also prioritizing, and then because I think. With my experience teaching, I think one thing for me that's helped a lot of people is I have nifty ways of remembering a bunch of really tough to remember stuff. And so whenever there was something where safety's involved or, you could get sued or something like that, like I make sure as soon as I hear it, it's okay, I need to find some sort of mnemonic to remember it. But I don't want to get too far into the weeds. Let's continue with this thing on sales before we bore everybody to death with my pondering. Let's go.
Know exactly what you need. And he sits you down in this chair in his office and he pulls down the screen, right? His white screen, he turns on his PowerPoint projector and he starts clicking through slides of check out all the people's backs that I fixed. Look at all these amazing testimonials. And then he goes to the next slide of all the articles that he's written in medical journals and all the awards that he's won. And he finishes his presentation and he says, let's get you scheduled for surgery. I'm confident we can fix your back. Do you want to schedule for the 14th or the 21st? Now, if that was your experience with a surgeon, you would probably run out of the room or make some excuse, right? Like I need to go to the restroom and you would sneak out of the office because he presented a solution without really understanding your pain. Like, what's the problem? Why does your back hurt? Think of all the questions. If you've ever been to a doctor for pain, think of all the questions they ask you. Where exactly on your back or your neck does it hurt? Show me. How bad does it hurt on a scale of 1 to 10? Is it a dull pain? Is it a sharp pain? Lean to the left. Let me look at your back. Lean to the right. Let me look at your back. Let's run, x-rays, MRIs. Like they ask so many questions because how can they prescribe a solution of surgery if they don't understand the full situation? What if it's physical therapy? What if it's just, like inflammation? You got to go do cryotherapy and that would reduce your back pain. It's not always just surgery. So we are committing malpractice in the capital raising world when we are trying to force our solution, our investments on every single person that's willing to listen without first understanding what's their compelling reason to want to do this in the first place. What are their pain points? What's not working in their existing investments that's causing them to want to look into hard assets? What isn't working? What returns are they not getting? So I'm gonna give you some great questions that you can ask. But what I want y'all to realize, I'm not gonna spend a lot of time going through this, but this is my sales framework that I've sold myself for 17 years. I've trained on this. I've generated over 900 million in revenue from this framework. And what I want you to notice is what is reversed here in this process. We don't start with presenting our solution to our potential investor. We start with qualifying. And qualifying means finding their compelling reason. Why multifamily versus stocks? Or mutual funds or bonds or whatever it is they're invested in? Why your alternative investments? What's the compelling reason that would make them want to do this versus what they're already doing? And it's so many questions that you need to ask. And we don't ever go to the point of presenting our solution with any investor until they've convinced us they have a compelling reason, that there's a reason they would want to put their money into our investments versus what they're already doing. And that happens from asking questions. And when people get objections that they're constantly having to overcome, or they're getting like lip service. If you've ever gotten lip service from an investor that tells you everything that you want to hear, oh yeah, this sounds amazing. Let me know when you have a deal that pops up in Atlanta. I'm totally in. And then lo and behold, 60 days later, you got a deal that pops up in Atlanta, you call them and they've got all these excuses of why they can't do it, or it just feels like there's no urgency there, right? Like you have all this urgency, like this deal's gonna fill up. I thought you wanted in, and they've got all these excuses. It's usually because we did not figure out their compelling reason. We didn't qualify them first before we told them all the amazing things about our investments. So there are 3 motivations to invest or to buy anything. And I'm gonna give them to you in the order of strongest to weakest. The number 1 motivating reason for somebody to buy anything or to invest is pain they are experiencing right now in the present. That will cause somebody to say yes faster than anything else. So we have to figure out, do they have pain that they're experiencing right now? Is there something that's not working in their retirement portfolio, in their investment structure? The second motivation to invest is fear of pain in the future. Now, I want y'all to think about the problem with the stock market right now is we are so far gone from 2008 that people don't remember how bad that hurt. But most investors that you're going to be talking to have, if they're baby boomers, for example, have been through 2 major crashes in their lifetime. And this is why they're not prepared for retirement. So their fear of something happening, a market crash coming, we're not, we don't have a crystal ball. Nobody knows when it's going to happen. And we know how much the Fed is messing with our markets, but we do know that we have an overinflated market right now. And we know that in our lifetime, in your investor's lifetime, we will experience another 2008. And it could be worse than 2008. And if you go back and look at the headlines from 2008, you're going to see stuff that says blood in the streets, S&P 500 down, 11% in one day. I mean, it was just tanking. This is the pain that people experience that's put them behind for retirement because their accounts have been cut in half. More than once for the average baby boomer. So we have to figure out what are their biggest fears with their retirement portfolio? Why would they want to invest? And we have to also acknowledge the stock market has been in a huge run up for more than a decade. So if you want to put something, I'll give you a bonus tip. If you want to put something in their mind that they may have not been thinking about, just use another investor as an example. So, one of the reasons a lot of investors reach out to us is their biggest concern is how much money they have at risk in the stock market. We don't have a crystal ball. We don't know when it's going to crash, but most people realize it's going to happen in their lifetime and they don't want to lose a bunch of their wealth. I don't suppose that's been a concern of yours. That's the perfect way to bring it up and put that in their mind, like, oh, I probably should be thinking about that. This is the motivation that's going to take them from extremely interested in your investments to actually wiring funds when you have a deal that pops up. It's not the shiny objects, which are all, the rate of return. All that stuff is amazing. But here's the problem. This is number 3. Here's the problem when we just try to sell or convince people on the greed factor. Like, why would you not want to put your money in this investment? It's double-digit returns. You're going to double your wealth in 5 or 6 years. Why would you not want to invest? When that's what we focus on, and that's where we are, putting all the emphasis, the problem is there is zero urgency. There is zero urgency for somebody to be greedy. Think about it this way. Let's say that you have a really nice car now. Let's say you drive a Mercedes E-Class, and you're like, I'm going to go upgrade. I'm going to go get an S-Class. I want a bigger car. but you have an E-Class and it's like 2 years old and it drives amazing. You don't have any incentive, any urgency to go make that decision now. You may go down to the dealership, test drive it, like, oh yeah, wow, this is amazing. But what kicks in is greed, right? That in your mind, oh, I probably shouldn't be doing that. It's the critical parent voice in our head that kicks in, the logic, right? Trying to justify the logic of, well, should we really be doing this? It's the logical brain that kicks in when there's no urgency involved. That's why it's a problem when we push just the logical reason of investing in multifamily, self-storage, whatever it is you're raising capital for. There's zero urgency if you don't first figure out pain in the present or fear of pain in the future and have that conversation first. Now, if you had to guess, why do people avoid this conversation? It's because it's a little bit more uncomfortable. It's a lot easier to talk about the shiny objects. Look at how amazing these returns are. Why would you not want to do this? And when there's no urgency that kicks in their brain, it's the critical parent that takes over and says, well, yeah, but we've been investing in stocks and mutual funds for 20 years and we've done pretty well. So that sounds scary because it's brand new. I think I'm going to stick with what I know. That's the brain that kicks in. But if there was urgency, the same car example, let's say that you drive a nice car, but you got an accident and your car was totaled and you don't have a car anymore. There's urgency now to go buy a car, right? Because you've got pain in the present. You don't feel guilty about buying a car because you have to have it for transportation. So the logical brain says, yes, we need a car because we need it for transportation. The logical brain has to kick in with your investors of, yes, we need to move into hard assets because if we don't, what's the alternative? And those are the tough questions that I'm talking about asking your investors. What's not working in their existing portfolio that made them want to look into hard assets? How much of their portfolio is at risk if they had to guess? And here's the harsh truth that most people don't look at, 100%.
I'm pausing there for suspense. And part of the thing that she's presenting right here is also, it has to do with a script that you put together when you're having these conversations. And I want to make sure that the two of you contribute and add your expertise or what you've found. I'm going to start with Jason. I know that you don't use a word for word script. Do you want to say a thing or two of what you found works? And the reason why I'm leaning on you is, as an introvert, it's a bit more uncomfortable than it is for a typical extrovert to be integrating these things into your business. So what you got, Jason?
So I've tried using scripts. I've tried like pulling it up on my screen and reading off of it. And when I'm reading off of it, is totally apparent that I am reading because I'm stumbling over my words and I go back and try to correct it like you do if you're reading. So one, I guess I'm not very good at reading out loud. But what I do instead of having a script is just having bullet points. And so I have the conversation go dynamically. I'm engaging, seeing where it's going, because with a script, you're like hard, fast, that's a script. It's what you read. Now, if someone says something, then you have to go flip through the script to see how the response is for that. But if I just have bullet points of the points I want to make, then it can happen more organically. And I think that helps me a whole lot more. And I think it makes the other person more comfortable as well.
Mm-hmm. Yeah.
No, and I would add to that too. Like, if you've boxed yourself in with a script, number one, you don't know what to do when something happens outside of that script. But number two, it becomes mechanical. And again, like what Jason was saying, it's just less organic. If you are fairly well versed on a lot of what you think is going to happen, say like with the bullet points, if it gets brought up, you can rely on a bullet point or you can just wing it because you've already in your mind thought about all the possible like scenarios that can happen. And so it's a little bit easier to deal with. And for me, like, I know a little bit about a lot of things enough to kind of be dangerous. And I just kind of go from there. And I think it goes back to what's your superpower? Where are your strengths? And what are you doing to continue to enhance those superpowers? Because since 2020, when we first started doing summits and we first started doing podcasts and stuff, from there to where we are now is exponentially different. And I am the same person, but my superpower has gotten so much stronger, and Jason's has too.
Absolutely. Yeah, I was going to say like the change over the last year with Jason, it's really been something. But I think we've like Keeley's presentation has been so great that I haven't been able to find enough segues into the things that I want to share information about. And Marvelous Mondays is the one that I couldn't find a good segue. You know, I was, oh, well, you need to paint in the present, paint in the future. pleasure, greed factor, I don't know. But if you want to meet a bunch of syndicators and people who invest in these businesses, I know that there are organizations out there charging 5 figures for your education, and you can just find a syndicator and ask them, hey, how'd you do this? Hey, how'd you do that? Hey, is this a red flag that I should run away from? Angel, do you want to talk a little bit more about Marvelous Mondays?
Yeah, so my favorite part about Marvelous Mondays is just getting to be with a group of people that are really pretty chill. It's not some pitch fest. It's not those things that you don't like. It really is a chance to just meet people. So if your pain point is that you're an introvert and you don't know how to have small talk, you don't know how to be in those conversations, it's a great place to see that people don't freak out if you don't know how to participate in small talk. They just don't. Because at Marvelous Mondays, there's other people in the conversation that can pick up the slack on that. So if you're in a conversation, you hear small talk going on, you can just stand there and wait for the conversation to turn. Because I know, like with Jason, he doesn't like the small talk part. I'm not saying that it's a waste of time. It's just not something that he personally wants to participate in a lot. So going to Marvelous Mondays, going to these virtual meetups gives you a chance to practice your conversation skills without it being super high stress, or it's just a way to practice without it taken away from something that you're doing somewhere else.
Mm-hmm. Mm-hmm. Yep, absolutely. It's and everybody gets a chance to say what they're doing in relation to commercial real estate at the end, so you have time to practice that as well. But it's really fantastic just talking to people and being real. And you're right, there's way more selling going on in these reviews than there in on a Monday. It's just basically, oh, how you doing? Okay, let's do the breakout room, and we do them, and just introduce each other and know what's going on. But let's we can do another couple more minutes, unless Jason, did you have anything else to add? Nope.
No, I'm
Okay,
good.
let's continue. Okay, you're watching the REI Rocks review. We're here every morning on Fridays at 11 a.m. Eastern. Let's get going.
100% of their money that's invested in mutual funds in the stock market is at risk, 100% of their wealth. And this is, when we realize that, this is the conviction that comes behind, like, we have to talk about what we do. Sometimes we're like, oh, I don't want to bother people. I don't want to bother my friends and family. But when you realize, like, the state of the union, not the actual state of the union, but the state of the union for people's portfolio, like the risk that's involved, like, how dare we keep that to ourselves? That's the conviction that makes it easier to talk to strangers about what you do. When you realize people stand to lose more than half of their wealth when this market rolls over. And are your friends and family going to be okay if they say, why didn't you tell me? Like, why didn't you tell me about this? Why didn't you talk to me about what's really going on in the markets? It's that compelling emotional reason that will get them to actually wire funds and say yes when you have a deal that you're actually raising on. So that's why we have to spend most of our time in our conversations talking about what's not working in their portfolio. And if you don't know how to bring it up, talk about other investors.
I got to pause it there too, because Angel, you've got your master's in economics, and the thing that attracted me to real estate was after realizing, like the wealthiest person I had a chance to pick their brains when I was like early 20s or whatever. He said to diversify with currencies because of the wide fluctuations in their values. But then I started to realize, okay, well, there's that saying about how back in Roman times, for an ounce of gold, you could basically get a nice meal and a toga. And right now, for an ounce of gold, you can get a nice suit and a nice meal. And that's about it. So that hasn't changed in thousands of years. Whereas real estate, it's actually kept its value like gold. And that's really what she's getting at here. Keeping that value, that purchasing power, maybe, it'll be like in Taiwan, where in Taiwan, you get a Big Mac combo, it's 135 Taiwanese dollars. And the idea of a Big Mac combo for 135 bucks, you can't even conceive of that in America. But that's how inflation works. It's possible. But Angel, what are your thoughts?
So the cool thing about hard assets such as real estate is that they move with inflation. They move with the market. So it's a really good thing to invest in simply because of the way that it moves with the changes. I don't know that I would necessarily say that the value of it is the same as it was previously, but it's going to change in those nominal terms. So it flows with it. I don't really know how else to kind of make that sound prettier in words.
Mhm.
Other than it's not losing the same way. It's not like putting money in the bank where the value of the dollar is falling each and every day. So it's not doing that. It's as the dollar loses value, real estate tends to increase in nominal terms. So it takes more dollar units to purchase that piece of property. Whereas if we're in deflation, or if we're in a recession and there's downward pressure on prices, there's probably going to be some downward pressure in those real assets as well. But each dollar will theoretically be worth more. And so the real value is it fluctuates a lot less than, say, the dollar itself.
Right. And people who buy real estate, they're savvy to these things. And so what ends up happening is as the dollar loses purchasing power, real estate owners are going to say, yeah, I'm not trading my real estate for your funny paper that's going to devalue this amount in this number of years. And so I think that's why, it as a hedge against a portfolio just sinking. I don't know. I know that in this whole community, we all think it's funny that real estate's called alternative when it's been around a lot longer than stocks. That's for sure. But anyway, it's that time. We now have to get to the doggy bag. I'm going to go back to Jason first. What are some takeaways from this presentation that you want to talk about?
How far into this did we get? About halfway.
Yeah, a
A
little
little
more than
over.
half. Yeah.
So my biggest doggy bag is like, if you want to catch the rest of this, the only way to do that is the VIP subscription. It's the best way to get all of this, to finish this, and all the other content we have. But yeah, and then like on this slide, it's talking about the pain in the present and the future, and then there's the greed factor for pleasure. I think of that as people like to win or they like to lose, and which one do they like more, not losing or winning? So that's what I meant. Not
Right.
that they like to lose, but they like to not lose. So, and it
Yeah.
goes
Yeah.
back to the same thing: the pain of losing, or is it the pleasure of winning? So,
Yeah.
Mm-hmm.
Well, and people tend to put more weight on not losing as opposed to winning.
Mm-hmm. Mm-hmm.
So,
Yeah, definitely.
it's
Definitely.
like it's almost socially more acceptable to not lose versus than to win.
agreed.
Right.
Yes.
Right. Right.
I just wanted to make sure. I see Jay was like, hey, how do I participate in the Marvelous Mondays event? I want to make sure that you saw that Jason responded to you and gave the link there. It is the academypresents.com/meetup link. So if you could let us know that you see that, that would be great. Otherwise, I'll be trying to track you down and make sure you get the link.
And we also have those triangles that have the QR code if you need that. So you can always replay this video and catch the triangles, or scan this QR code right here. So
Right here.
Exactly. I'm sitting here going crazy, just going click, 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 to do all these different things here. But this has been fantastic as usual. This is the REI Rocks review. We're here every Friday at 11 a.m. Eastern. We're live streaming on Facebook, on LinkedIn, on YouTube, on Twitter or X or whatever it is this week.
Whatever it's being called today.
Yeah, exactly. But I really appreciate the fact that you in the audience, spent this time with us. I look forward to catching you again next week. And don't forget, the academypresents.com has a spot where you can get the VIP subscription. But I also can't leave without reminding one more time. We got a summit coming up in a month. It's really exciting stuff, and if you are a subscriber, you do end up getting. Oh, good, yeah, JN on here. You got the link. That's great
Awesome.
stuff. Yeah, but yeah, so make sure that you register for this so you get your free access. I still can't believe how much Angel gives with the free access each summit, but here's the code right there. That's all I got for today. I don't know, Angel, if you wanted to say some more about the summit or if we'll save it for next week.
I just I would love to see all of y'all there. There's a lot of information that's available on the free tier, and it's available the days of the event. So if you want to see it at a time other than the event, you're going to need to upgrade somehow, whether that's through a VIP ticket or through the VIP subscription, which is less expensive, by the way. So just putting that out there.
Awesome. Awesome. All right. Well, thanks everybody. We'll see you again next week or maybe on Monday.
Bye, guys.
Yeah.